say you know more than I do, obviously. Especially about HR tech investment, because many of you are actually vendors of HR technology products, and you have been successfully or unsuccessfully raising capital over the last few decades. Hopefully a less period of time. However, so you probably know better the space, and more importantly, you are here. You are in San Francisco, in the capital of venture capital, of the capital of venture capital. Okay. In the sweet spot, best place to raise venture money, etc. So you hear more about those deals that I'll be talking about. However, I wanted to share and discuss my personal perspective on the VC investments in HR technology. But before that, let me briefly introduce myself, because I see a lot of new faces in the room, and some of you guys I don't really know. However, I would love to know more. So I do actually 3 things. My main job is I work for a venture capital fund that is focused specifically on the HR technology industry and as well education industry, that is called Talent Equity Ventures. So right now we have 9 portfolio companies. Actually, 8 of them, 7 of them are here in the US, and 2 of them are in Eastern Europe. We've been around for 2 years now. We've exited 2 companies. We didn't have a single write-off yet. However, I'm afraid that is going to happen at some point, just because life is life, and this is venture capital. So we invest only in this industry. We usually do seed stage. Sometimes we do round A investments. But probably in companies the valuation less than 15 million, etc. And the other important rule that we have is we always co-invest alongside a strong lead investor. So basically jump on the bandwagon with guys like Santi or guys like Jake from Axel Partners, who was here earlier. So this is the first thing I do. The second thing is Talent Tech Labs, which is an incubator for early stage HR technology companies in New York. So if any of you are interested in expanding in that geography, we have a nice spot in the center of the city on Manhattan, near Times Square, basically 3 minutes from there. And we do help and support early stage HR tech companies with the network, with the infrastructure, and obviously with capital. And the third thing I do, I help to organize this HR Tech Tank and HRU events across the globe, which helps me basically to get a perspective on what is happening in this exactly space globally. So, for example, we had an event about HR technology in Helsinki, as I said. We had an event in Baltics. We had an event in London. And I'm always surprised how many HR tech companies are out there, and that sometimes the quality of those companies is even higher than of companies that are based in Silicon Valley or based in the US. Because most people don't even realize that there's a lot happening outside of the country, and that Eastern Europe or Asia, I don't know, can have emerging HR technology as well. So kind of have this global perspective that I wanted to share with you. But before that, let me basically set up what I'm going to be talking about. First of all, I want to do a small market overview of the HR technology investments and how venture capital is floating into the industry, what is happening right now. And then I would say a few considerations about building, share with you a few considerations about building an HR technology startup and what it can turn into, and how usually HR tech startups end up where. And as well, I will talk a little bit more about what investors want in the HR tech space. So this is a map. I don't know, how many of you have already seen it? Because I've shared 2 people only. Okay, so I'll need to talk about it a little bit more. So this is a map that I developed on behalf of our incubator. It basically describes the whole ecosystems of products in the recruitment space. And it looks this way. So we have employer-focused products here and candidate-focused products over on the top. And here we have a process. So from sourcing to interviewing to actually hiring people. So for example, on ATS would be more on the employer side, on the hiring side, because it basically comes in the end of the process. However, things like job distribution or job marketing would be here in the beginning of the funnel. And B2C products would be obviously up the spectrum. So on this map, we have 250 companies. And I've single-handedly updated it last year, and I deleted 40% of all companies on the map. So I updated annually, and in last year, 40% of companies from the previous map gone. Went bankrupt, went bust, their websites do not exist, so not happening anymore. Quite depressing. However, it proves two things. First, a lot of stuff going on in the industry. 250 companies only in the talent acquisition, only those that I know of. And as well, second thing, death rate is very high. So this tells a lot to the venture capital investor.
Do you include the exits as a death rate?
Well, if the company if the company retains sort of the brand and the website and operates under or operates under this bigger brand and doesn't exist as a separate company, we would take it off the map, which would be that. But you can imagine this is marginal. It's like 3 of them actually exited successfully. So, so not really relevant.
But identified would be.
Right.
And by the way, thanks for asking questions. I would very much appreciate if you guys contribute.
It's still up there, you said.
So,
Until it was.
Oh, until it's up there, yeah.
What?
No, we were saying Talent Bin was not a death because it still operates under Monster as a brand, but identified.
Exactly.
Got
So
swallowed.
this last month was updated like 4 months ago. So maybe some companies went down already since then. Ray, you have a question?
So is it just the acquisition side? That
Yeah, this is talent acquisition side of things. However, right now I'm working with Josh Burson on developing the second version of a map that would be supported by Burson, by Deloitte, and that would include the whole spectrum of the HR technology ecosystem. However, I think it's going to be out probably in the next 2 to 3 months.
Because I was kind of curious how you defined it. I'm glad to hear you don't just define it as acquisition, but beyond acquisition, do you also
of course.
engagement?
We do a lot of stuff in the general HR space, so it's very interesting as well. And actually, I think that the most big successes in the HR industry are going to happen outside of talent acquisition. Because talent acquisition, and I'm going to talk about it a little bit later, is full of fluffy stuff, full of things that are that add value on the surface, but don't actually add value to the business. So they help, but marginally. So let's talk about the market itself. So HR software market today is worth 15 billion. It's not necessarily the figure that matters, because, for example, I've seen reports that only say 10 billion. Burson says 8 million, so it can differ. However, probably the entire HR software ecosystem is around, say, from 10 to 15 to 16 billion of dollars, compared to the entire HR industry as a whole, which could be 500 billion, even more, if you take all the staffing revenues, etc. in. So we have this giant 500 billion staffing, and we have a small HR software that is going to take over and basically help to automate parts of this big HR general ecosystem and take over the industry. So right now we have very low level of consolidation. So this is a very fragmented market, and the largest player has only around 12% or 15%. And a lot of small vendors that as well have small shares, marginal shares, etc. So it has to be consolidated in the next couple of years. There's just no way it will not be happening, because right now it's basically a problem for the buyer, having too much options to choose from. And it's as well a matter of survival for those smaller companies, because they will not be able to sustain their businesses having this small revenue share. So we do believe that the market consolidation is going to happen. That's one thing.
A quick question though.
Yeah.
From that 15 billion, what is your take on where's the money going to, what area of HR?
Well, I would say that it's mostly recruitment, just because actually from the 15 billion that is HR software, it is mostly the classic big vendors like SuccessFactors, like Oracle, like SAP HR, so big suites. However, in the entire HR universe, most of the money is in recruitment space, in staffing, in basically recruitment services, etc. So you're right to notice there is a certain disbalance between those two things. So, getting back to the trends, the first thing is high level of fragmentation. The second thing, and I've taken this from a report by a very respected venture capital fund that is called Blackstone. It's a private.
That's a great report.
What? It's
I
a great
have the same report, yeah.
Exactly.
It's very good.
I think it wasn't distributed like to a wider
No, it
audience.
wasn't.
Yeah. So I got it from them personally. So this is their projection of the industry growth, and they say that in the next few years it will grow. It will grow around 5 times, and it will be equally distributed between different aspects of HR. So recruitment would get a similar amount of growth to as compensation or as performance management, etc. So 2 things: industry is going to experience consolidation, and industry is going to grow. Sounds like a very good space for venture capital money. Is there a proof to that? Let's see. So these are some of the metrics on the companies in our space that are public. So I did this presentation probably last time about 7 months ago, and since then, LinkedIn market cap went from 21 to 26 billion. Workday market cap increased significantly, and Cornerstone market cap went down. Strangely, I've always thought that they're performing quite well. So, and the overall portfolio of HR tech companies on Nasdaq Stock Exchange actually went up even more than the overall Nasdaq index. So capital markets are showing very good traction in the industry, and that should be a positive sign for private companies that are looking for venture money.
Don't you think that it's cyclical though?
What?
I mean, wouldn't you say that during
Cyclical.
Cyclical, yeah. So like during strong economic times, you're going to see growth, and then during downturns you're going to see down.
Well, it's actually a question if the HR industry as a whole is cyclical or counter-cyclical, because some say that recruitment actually falls less than the other industries in the crisis times. So it's quite crisis resistant. But this is an argument that we can have. And is US in a crisis right now? Are we approaching it? No.
I was just thought. I mean, so it's interesting because like I worked at Intuit for 4 years, and I mean we need 2 things, right? Like everybody pays their taxes, so TurboTax was steady regardless of where you went, and we found that a lot of people were starting small businesses and needing QuickBooks subscription. So it's sort of like when the economy was tanking, people were getting laid off. I would think here, like, I don't know. Again, me not knowing much about the industry, or as much about the industry.
Well, but again, look at job boards. I am pretty much sure that for them growth is counter-cyclical, because when there are massive layoffs, you have more and more people looking for a job.
Jobs, right?
Yeah, and you have more traffic to the website, and you basically grow with that crisis. And for example, in 2008, some of the job boards experienced very significant boost in terms of a user base that allowed them to grow on the top of that user base in the following years, which helped them a lot. And I'm again judging from experience of some of the European job boards. So Headhunter in certain countries, it's like a name of Eastern European job board, grew dramatically in those years.
Yep.
Yeah.
So as with Career in 2008, we actually had to shift, although like the user growth spiked.
Yeah, of course.
We had to shift business model to start selling, like to non-profit, for-profit universities and being shady with that stuff.
Yeah,
so,
exactly.
But that you stay alive due to that. So I just.
But you build the user base, and on top of
And
that,
then
you can
leverage
monetize
that.
it.
Yeah,
of course,
absolutely.
that's a story. Sure.
So your analysis of the market, how are you accounting for the fact that there are more people leaving the economy for the first time globally and will continue for 10 years than people entering the economy?
Yeah.
So you mean people
So
will...
in the U.S., there are 10,000 people more today that will turn 65, then will enter the workforce. And this will happen for the next 10 years. And if you look globally, it's worse in Japan and Asia and Europe. So how does that affect your modeling?
Very interesting question. What's your take on that?
Well, supply and demand, if there's no supply, I think it's going to fundamentally change the whole balance. To be to a point where all the technology may not help you if there's one that can do the job.
So if I understand you correctly, we will have limited supply of talent. because of that.
Yeah, so if you go to a public school in the US today, or you go to an
Okay.
oil refinery, or you go to any major industry that requires four-year education or certification, there's no one under the age of 50 that's actually operating a business.
Okay. But that means that companies will spend more on recruitment.
They either are gonna spend more on recruitment, or they're gonna have to find an alternative model, like Moneyball,
Exactly.
to do it.
Well, but companies are not that advanced. So
Well, staffing companies are.
I assume that companies would be basically pouring more and more money into the space. So that's,
Yeah, they may.
they may. So that, it's again a double-ended sword, but I would say it more as a positive. It's actually interesting because that's the main difference between US market and European, in some certain parts of the European market. Because we have a shortage of talent. And companies spend a lot of money to find people. So it's like, it's a candidate market. While US is a client market. You have very good, you don't agree?
I'm just thinking out loud.
I
Well,
don't think it is.
You don't?
No, I
I
think
don't
global,
think so.
it's a global pandemic,
Okay.
which is you just will not be able to find people to do work.
Yeah, there's a lot of, if you look at a lot of the research reports that, trying to think of even which particular ones, but there's definitely the kind of skill shortage idea that's looming.
Mhm.
You know, I mean, you see people thinking about that a lot, and it's a recruitment problem. It's also an education and training problem. And I think that technology might help fill that gap.
That's exactly what I wanted to say. All the time when I go for a pitch deck of a startup company, I would see this as a reason for the market growth. So they talk about skill shortage, they talk about increasing demand for qualified candidates, and they see it as a trend that would help them grow the market. So that's a positive sign for them.
I was gonna say, as far as like the job market though, are we talking about, I mean, what segment of the market are we talking about? I mean, there's the effect of globalization, but we're talking about professional services, white collar, blue collar, because like I grew up in the Midwest, I grew up on a dairy farm, my folks work in the paper mills. Half of that, I mean,
Yep.
honestly, half of that market is tanked. They can't find jobs, so it's like who's, as far as the buyer of technology, I'd be kind of interested to get your perspective on like how that impacts the global, the global trend, or what other people think about it.
Well, if we talk about demographics, I'm sure in the global sense, I'm sure there is a lot of things that are going to be going on in the industry. For example, I would say that we will experience a massive supply of talent from Asia, from India, that would, for example, executive talent and talent. Ted is shaking his head again. So executive talents or even knowledge workers that would replace workers in the USA. And that creates a threat and an opportunity for recruitment as well. Because now you have to care a lot more about cross-border recruitment, you have to care a lot more about the tools you use to recruit overseas, which creates, again, a massive opportunity. So there's a lot of things going on in terms of the demographics. And they are going to influence the market in many different ways. And as we now discussed, each one of them can be, on one hand, a very significant threat to the market. On the other hand, could be an opportunity for technology companies to help do some processes more efficiently and basically help the companies to overcome these threats. So I would probably now not go into the demographics discussion because it's quite complicated. However, if you want to continue it, I'll be happy to support it. So yeah, getting back to my presentation. So the capital markets are showing traction. And the M&A is following as well. These are some of the big exits that you all have heard about and those have been happening in the last couple of years. So Oracle bought Slea for almost $2 billion, IBM acquired Connexa, which, as I said, basically is a services business and has nothing to do with technology. SAP acquired SuccessFactors, SAP acquired Fieldglass. I'm not including a figure here, but I've heard that it was like $1 billion and something. So it was quite a big acquisition, but the exact amount of money that it was acquired is not public. So big names invest, and when I talk to potential co-investors and other VCs in the industry, most of them, especially the ones from Europe or from Australia, they haven't even heard about those names. And I'm trying to sell the HR tech market based on those major acquisitions that are happening. However, on the back of my mind, I always have these small things. So not only big deals happen, like $1 billion, $2 billion, but a lot of small deals are represented in the market. So as you can see, in 2014, we are going to have around 400 M&A deals in our space, which is a lot compared to other segments of the enterprise software market. So basically a lot of growth. However, if you look at those, identify that was an acqui-hire, as far as I know. Bright was actually quite a successful acquisition, but I don't know if anyone could comment on it. For me, that was strange. I mean, they didn't retain the founders, they closed the website. Was it just the algorithms that we were looking for and some of the tech talent? Okay. So probably we might see more of those types of deals. However, you probably all have heard about Cornerstone acquiring Evolve.
Yeah.
So what was that?
Yeah, good question.
Any comments?
That's my kind of segment of the industry, you know, and so I actually was at HR Tech and having a meeting with a couple of high-level product people from Cornerstone On Demand, and that news had just either been out the night before or the next day, and they didn't even mention it.
Like a few days before that.
Yeah, and we were just talking about Cornerstone On Demand and assessment stuff. So, you know, I know that company pretty well. It's my space that I follow, and they had a call center, you know, call center guys, and they had some content that like one of the scientists came from Unicrew actually, and I used to work with him there, and he developed some, you know, pretty good assessment content, right? So they had nothing like SHL or some of these other companies that have a whole lot of different content, and then I was mystified because they took a lot of, I think I heard something over 20-some $million in funding, right?
So
And,
actually 40 million,
yeah,
the exact
so
amount
they
that
weren't
they were
making-
acquired for.
yeah, and they weren't making 40 million of revenue, so
However,
it was a
that's-
very odd deal to me.
But it is, what I've heard is that Evolve is a very strong product. I've communicated, no, you don't agree?
Well, no. Well,
It's
They
okay.
invested 40 and they sold it for 40.
It's not a good, that's the problem that I wanted to discuss with you guys. So it was a strong product. They had clients, they had growth. However, they had to sell for the exact amount of money that we raised.
Yeah.
That's a bit depressing for the industry. Somewhere.
Yeah.
I
That's
don't
all
know
fire
about guys
sale.
from there. It seems
Yeah.
like they had a really hard time breaking out of the only selling to the BPO. Like they ended up becoming very service focused. Margins were not nearly as much as what it would take to scale.
Okay.
And they just struggled to kind of productize their solution effectively.
Yeah, they
So-
flip-flopped a lot with their product.
They were too service-based?
Yeah, they essentially, every deal they would do would require a ton of customization.
Yeah.
Okay.
That's the
And
assessment.
Also in a very sort of narrow BPO
Okay.
industry.
You remember I asked Santi a question. Why, like, is it a good thing that HR tech companies tend to provide services on top of their products, or is it a bad thing? So
Yeah.
now we are hearing that it actually might lead to bankruptcy, just because you cannot sustain your model.
Look at the difference
Yeah.
between like the Smarter acquisition that just happened by
Yeah.
Pluralsight for 75 million, and I work with them pretty closely, so I'm pretty aware of like what they had.
Mhm.
And they had algorithms and a really cool idea that the company themselves would customize, so they had no professional services really, but a really good technology, and they probably, I know they took some money from Google Ventures and stuff like that, but I bet they, you know, were running pretty lean. Their amount of total capital is
That
pretty
is
low,
another
and they
acquisition
sold
that I
for.
wanted to talk about. So then
Yeah.
you wanted to.
Yeah, I was gonna say, if they have to customize, definitely they're gonna run into trouble, but if they're just integrating, I think that's fine.
Evolve's basic
$100
model was to go in and craft different stuff in every situation, run a bunch of studies to be able to calibrate their algorithms and stuff like that. And the cycle of both selling that into an HR department and then delivering on the professional services side is a brutal grind for the margin that you make.
Do you know
and stuff.
what was the average check for Evolve? Like,
Well, I had them in competitive situations where I saw their pricing, and I know their pricing was above market.
above market. Okay.
Yeah, I mean, they lost a couple deals that I had competitive things where I was running an RFP, right, and they were 30% above,
Mhm.
40% above the other competitors, and with not anything that I saw gave better value. So, but I would say they would probably angle for a, couple $100,000 a year deal, everywhere up to maybe $1 million at a large, in the assessment industry, $1 million deal on a yearly contract is pretty close to the higher end of the market.
You said they raised 40 million, they sold for 40 million. How much did they burn?
Probably a couple of millions a month.
If they burned
Yeah.
a couple of million, they sold for 40 million.
Yeah.
So that.
So it's a negative. That's a good point.
Yeah, sure. So getting back to those acquisitions, so Monster, quite Yahoo, Visify, so those were not successful acquisitions. And for example, the only one from this list that was successful is Broadbean. It got sold to Career Builder for the second time because firstly it was sold to a European private equity firm, what's his name of this company? Eventbase. And then it was sold for the second time to Career Builder. And both times Kelly Robinson, who's the founder, made quite a lot of money out of it. However, what I wanted to say, again, getting back to the Evolve, for Cornerstone, that was a very good acquisition. And for Workday, Identified is a perfect acquisition. And for many of those companies, these small startups that go bankrupt and that they acquire are very, very good acquisition targets. And that's actually a problem. Because now what we understand in their strategy that they can just wait. So I'm SuccessFactors. I see a lot of cool companies with cool teams, with awesome traction, but not enough to sustain their model, dying. And I see that if I wait for another half a year, I pay twice as less for this company as I would have paid if I acquired now. And that, unfortunately, becomes part of their acquisition strategy. And I've been hearing, and this is depressive, that's why I wanted to share that with you. And I've been hearing a lot about that from actual acquisition folks from those companies. For example, I was talking to CSOD, to Jason Purcell, who runs their M&A team, to Workday, and a couple of other folks. They wait to acquire. Not good. Not good for the industry, not good for companies, not good for venture capitalists.
But that's just a couple big companies.
Okay.
Then, I keep going back to like just the Pluralsight and.
Yeah, I mean,
that's
from those 400 deals, most of them happen from undisclosed amounts, very small companies, small startups, small businesses who acquire. So it's not only the majors who do acquisitions.
So the problem I have with all of this is how we are actually talking about what success is in this market.
Fair enough.
And Monster acquiring Talentfin is not a success in any way, shape, or form.
Yes.
And
Why not?
what have they done that's
Why
successful?
it was like a fire sale acquisition, right?
So they had runway of 2 months before acquisition.
So what I'm interested in is how are these companies changing the business for the better? And I don't actually think most of these solutions that are being created are changing the business for the better at all. So all it is a venture capital game. A lot of people are super desperate. They're willing to pay tons of money for shitty tools that then get bought, and we're back at square one with a totally broken industry. So how are you as an investor changing the way that you think about, who is doing what, and are they doing the right thing for the industry? And,
Awesome.
and what power are you using of influence to decide who gets funded?
Okay. Awesome. I was going to switch to that part a little bit later, but I will do it now because I think that's the most important. It all comes down to the areas in the industry where HR tech can actually add value. Because there's a lot of stuff going on in the industry, and as I said, there are like 250 solutions on the map. There are probably 500 solutions that I reviewed in the last 2 years. Quite a lot of stuff happening. However, most of these products, their main problem is that they are point solution. So they are solving a very specific problem that client has, a small part of this problem. However, what clients want to buy is not a product that solves a problem. They want to buy a platform or a solution that solves the entire problem. And they are ready to pay premium for buying for like getting rid of their pain, because.
Well, I mean, the thing is though, when you have, like, it's kind of like the McDonald's problem, because really what you have now is a market of people who almost even don't even know what's right anymore, and what people are building into, like someone was talking about Guild, and I'm really sorry, I have to say this, but like Guild basically went out and talked to every single person that ever thought they were a recruiter and pulled every feature that they could possibly build to make every single person happy and put it into all one thing.
Okay.
That's not necessarily good. Just because people think they want it doesn't mean it's going to be better. Like there's a root problem here.
But why exactly do you think